Hello guys, I hope you all are doing well. So in today's video, I wanted to see how much capital or what kind of calculation would you need to make $50,000 a year. So for the calculation, I'm just gonna do a rough numbers. So let's say if you have to make $50,000 in a year, right? So that is equal to 52 weeks. So if we divide that 50,000 by 52, that comes to about 961. So just for keeping our calculations straight, let's round that up to $1,000. So basically what it means is you're gonna need $1,000 per week from your options income to make that $50,000 mark, right? I will go to my Robinhood account and then we are going to see this in detail and break it down in the particular scenarios and how the calculation looks. So if you are interested in this, then please stick around. We are gonna discuss all about that. Okay, so I'm in my Robinhood account and as you can see that this is I'm going to do this calculation on using a tqqq, which is a QQQ leveraged ETF, and I have been using the options in tqqq and I have been fairly successful in this. So that's what I'm gonna use for our calculation to see how much would you need to make that $50,000, right? So let's and I'm gonna also divide that in two use cases that I have started doing it here. So basically case one is gonna be a bit safer option contract, which is about 0.25 delta, and the second case we are gonna take a little bit aggressive, which is closer to the 0.50 delta. So delta, if you're not familiar, just quickly, like 0.25 delta would mean that you have only 25% chances for your contract to go in the money, whereas 50 delta means you have 50% chances that your contract will go in the money, right? And also if you're completely new to the option, then I have a lot of videos around options trading and you can definitely check them out in my channel. Okay, coming back to this, right? So let's go back to my Robinhood account and see how the tqqq plays out. So right now it's going for a 44.85 right? So let's go to the options chain and we are gonna see the first case, which is the 0.25 delta, right? And again guys, I'm gonna use the covered call strategy for this, and I have a detailed video. If you are not familiar with the covered call and how it works, then you can check that out. I'm gonna use the covered call and see how much of the tqqq shares you would need to make that $50,000. Okay, so I usually do weekly calls, so we're gonna do sell call and see December 15th, right? So let's go for that 0.25 delta, right? So let's see this one, which is about kind of 0.25, right? So let's take this case, right? So 0.25 delta, as I said, this is a safer use case, so let's use this one. So as you can see that you're gonna get 0.38, which is $38 to make this trade. So we are gonna note that down. So we are basically going to make $38 in this in a weekly, right? And how many contracts would you need, right? So as I said, we would have to make $1,000 a week. So let's divide that 1,000 by the 38, right? So you would roughly need I would just round that up to 26. So you would need 26 contracts, right? Okay, on the capital, right? So let's see how much capital would you need, right? So tqqq right now, as you see, it is going for 44.85, right? So let's round that up to $45. So you're gonna need and as you know, for every contract it's 100 shares per contract. So that's basically 45 and then multiplied by 100, and then you need 26 contracts of that, right? So this is the calculation, right? So basically you would need 117k to make that $1,000 a week, right? For every contract you're gonna receive $38, right? So this is the kind of a low risk scenario. So if you have this much amount, you can make $1,000 a week in this case. Now let's say a little aggressive, right, on the case 2, which is the 50 delta. So for this one, if we go here, and this would be almost at the money, I assume, right? So yeah, as you see, right, this delta is 0.49, which is close to the 0.5 that we are looking for. And for this one, if you open sell call, and it looks like I already have a position here, and you're gonna receive $110, right? So let's do the same calculation here, right? So you're gonna receive 110, and let's do the dollar on this one. So you're gonna get 110, right? So that's gonna be your premium for every week. And for the contract, right, so you're gonna divide that 1,000 divided by your 110. So you're gonna need roughly 9 contracts, right? So you need 9 contracts, and for 9 contracts, how much of the tqqq share would you need, right? So for that, what you're gonna do, the same thing. You have right now the price is going for 45. You multiply that by 100, and then you multiply it per contract, right? So this is the amount. So you're gonna need 40,000, right? So roughly you need $40,000, which is not bad, right? If you have this, you have to just go little aggressive on this, and there are risks associated to that. I'm just gonna quickly discuss once we close this one. So this is the calculation, guys. We are gonna need roughly about $40,000. With this, it is very much possible to make $1,000 a week. There are some risks, so let's analyze those, right? So first thing is at the money call, as I said, right? So if you do sell a call, there is a very high likely chance that your tqqq shares would get called away. So basically, as I said before, 0.50 delta is, there's a 50% chance that this contract would go in the money come December 15th, right? So in that case, if you go in the money, if the tqqq raises up to 46, you will have to give away your shares. So that's the risk associated to this. The other thing is it's always difficult to adjust the positions, because if you are keep selling the share, then you are again doing the cash secured put. You may be adding your capital gain for the year, and that could impact a little bit on your taxes. And I have some detailed video on the taxes, on how does the overall the capital gain impact your taxes, and there are some ways you can save that. So do check out that video about that. And one more point is when your stocks get called away, right? I'm not calculating the stock appreciation that you might get, so that is not included here. So that also could add as a cushion. So basically, let's say if you are selling a call at 45, right? Or let's say you are doing the 38, right? So if you're selling the call at 47, you're gonna get the $200 for every contract as a stock appreciation, right? So that could bump up this value as well. So you may not need even this much capital, right, in this scenario. So I'm just not accounting for that, so do keep that in mind. Okay guys, so that was it. That was a video. I just wanted to show how the calculation would look if you are targeting to make $50,000 a year. And there are other videos around this whole options trading that you can check out in my channel. I hope you liked this video. If you did, do give a thumbs up, and subscribe to the channel if you have not. I'll talk to you in my next video, guys. Bye bye. Happy investing.